So by this point, you guys should know a lot. Just to recap what we've been over thus far in our training, we learned how to read a market the correct way. So we learned how to tell if price action is trending bullish, if it's trending bearish, if we're in consolidation. We learned about how to identify structure levels. We learned about the higher high, higher close, and lower low, lower close techniques. And with that, new structure highs, new structure lows. We also learned about the Fibonacci tool. We learned about how to use retracements, how and when to use Fibonacci extensions, which ones are the ones we really want to pay attention to, which ones maybe not so much. Along with that, we learned a few simple patterns. We have the AB equals CD pattern, which goes right hand in hand with how the market likes to move harmonically. We also learned about double tops and double bottoms. And then following up on the double tops and double bottoms, we learned about the 2618 trade. So you guys have been given a lot of information to break down the market, and we're at the point right now where, aside from learning about advanced patterns, you should have enough tools to go out there and find quality structure trading opportunities. Now, this whole time we've been talking about filters. Obviously, there's tons and tons of trading opportunities out there. One of the things I tell my clients in the live room all the time is, well, if I wanted to, I can basically find a reason to enter a trade, bullish or bearish, at almost any given time. The thing is, I don't want to, because, well, I've done that in the past and I've lost money pretty quickly. So the key is filters. How can we filter out the low probability trading opportunities and only involve ourselves in the high probability ones? And today we're going to learn about a system that will help us do that. It's going to be called the CTS system, so the Combined Technical Scoring System. And not only does it give us a load of filters to run through, but it makes sure that it allows us to evaluate the market the same way each time. And the key to trading consistently is analyzing the market consistently. And if you continue to analyze the market the same way each time, meaning you look for A, then after that you look for B, then C, then D, you're going to find that your trading is going to become much more consistent. And, well, as long as you're putting yourself in high probability situations, that's what's going to allow you to be that consistently profitable trader over time. It's also going to get rid of those maybe type trades. Well, maybe this is that. Maybe I should take this. Maybe I should stay away. There'll be no maybes in it. You'll have a strict ROE, so strict rules of engagement about when to involve yourself in the market. And again, because you're doing the same thing over and over and over again, it gets a lot easier to break down a price chart and a lot easier to find yourself in those high probability situations. So in front of you is the Combined Technical Scoring System, and as you'll see, it's basically a checklist. And what you're looking at right now is the default or traditional checklist. But what I encourage you to do is, as you go on in your trading journey, after you're done going through this training program, if you find other things in the market that are important to you, add them to your list. So basically what I'm trying to say is this doesn't have to be the end all. There are certain things in my list that maybe don't matter to you. There are certain things in your trading that maybe don't matter to me and you'd like to add. You have the freedom to add what you want, to take out what you want. The key point I want to make with this is, again, you're consistently looking for the same things in the market each time, and you're running through that checklist the same way. That's the key. It's not so much what's in it, it's the process of you going through it time in and time out. So I'm going to run through these conditions real quick, and then I'll explain the point value later. But the first condition I look for in my technical trader, in my combined technical score, excuse me, is the RSI overbought. Is the RSI overbought, meaning it's greater than 80? Is the RSI oversold, meaning that it's under 20? If so, I assign myself 1 point. Next, I look for minor structure. Or we need a minor structure level on my lower time frame, so the current time frame that I'm looking at. If so, I give myself another point. Next is major structure. is there a major structure level found on a higher time frame? So on this chart, I have daily slash 4 hour, and this is taken from one of my older trading plans when I used to trade the 60-minute chart. So I would bounce up one time frame higher to see if there's a structural level there. Now, obviously, this is going to change depending on what time frame you're looking at. If you're trading the 5-minute charts, well, then maybe the 15 or the 30 is your higher time frame. If you're trading the daily chart, maybe the weekly is your higher time frame. That's something that you're gonna have to determine on your own. Usually I'll go 4 times the current time frame as being my higher time frame. So if 60-minute charts is my current time frame, the 4-hour chart is my lower time frame. If the 15-minute chart is my current, or the 4-hour chart, my higher time frame. If the 15-minute chart is my current time frame, the one I'm evaluating my trades at, then I look to say the 2-hour or the 1 hour as being my higher time frame. Next is ratio confirmation. Now, ratio confirmation simply means, is there a Fibonacci level at my potential reversal zone? So is there a Fibonacci extension? Is there a Fibonacci retracement? Is there a Fibonacci inversion? Whatever level I'm identifying, is there Fibonacci confluence at that zone? If so, then that's 1 point as well. Next is higher time frame confirmation. Now, this can be very similar to major structure, and this is one that a lot of traders I work with take out because again, you're going to your major structure, or you're going to your higher time frame to look for your major structure level anyway. So it's kind of like having the same thing twice. What I look for in higher time frame confirmation is, are we involved with the underlying trend? Again, if I'm trading on a 60-minute chart and I'm looking for a bullish opportunity, what type of trend are we at on a higher time frame? If I go out to a daily or a 4-hour chart, are we overall in a bullish trend? Because I want to get involved with the overall move of the market. So if you're going to use the higher time frame confirmation, that's what I recommend using it for. Asking yourself, are you with the underlying trend? Is there anything on the daily chart, the 4-hour chart, that is going to stop you from trading this? Meaning, are you at a major structural level going the opposite way? Is there room for the market to expand in whichever direction you're looking to trade it in? Next is the ABCD pattern completion. This is pretty obvious. This is going to be an ABCD pattern. Do we have an ABCD pattern completion at my potential reversal zone? This one's going to be 2 points. Next is advanced pattern completion. You haven't learned about this yet, but it'll be Gartley, bats, ciphers, butterflies, and if you go on to decide to trade crabs or sharks or anything like that, those are all advanced patterns. Do we have one of those at our level? Next is an additional test of structure, which is basically, do we have a double top or a double bottom? Does the market test this structure level more than once? And lastly is RSI divergence. You guys learned about that during our section about double tops and double bottoms. Does the market put in bullish or bearish diversions on that retest? And if you add this up, you can see we have a potential of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 total points on this scoring system. Now, obviously, we don't need 13 points to trade it. Your trading opportunities would be far and few in between. But you want to identify what is the most important to me. And here's how I would look at it. In my personal trading, the RSI being overbought or oversold is very crucial and important to me. So this is an automatic one that I need. So let me make this a different color. This is automatic. I need that. I also need the market to be at structure. Now, it doesn't always have to be at major structure, but it has to be at some type of structure. So this is going to be another one that's mandatory for me. Again, major structure isn't mandatory. Obviously, I'd like to see it. It means more confirmation, but it's not mandatory. Ratio confirmation. Do we need to have Fibonacci confirmation at my entry position? Again, this is something that I would like to have, but no, I don't necessarily need it in my trading. Same thing with higher time frame confirmation. Do I need an AB equals CD pattern completion? Me personally, no. Do I need an advanced pattern completion? No. However, I do need an additional test of structure. So I do need a double bottom or a double top to be at that level in order to enter. And I do need RSI divergence. So you can see when I break down the things that are crucial to my trading, it would give me a minimum of 1, 2, 3, 4 points. So the minimum CTS score, combined technical score, that I would need in order to enter a trade would be a CTS 4. So if I'm doing my analysis, if I get anything less than a 4, I can't take the trade. So let's say a trader John Smith says, well, I do need ratio confirmation because that's important to me, and I also need higher time frame confirmation because I only want to get involved with the underlying trend. If we're in a bearish trend on the euro dollar on the daily chart, and I'm doing my analysis on a 60-minute chart, I only want to enter bearish trades, so I need that higher time frame confirmation. Well, now you see John would need a minimum of 6 points. So anything under a CTS score of 6, he would not be able to enter. So again, this is something that you want to run through. I can't give you a minimum score. This is something that you need to ask yourself, what is important in my trading, if anything. And once you're able to highlight what's important and what's not, you can get that minimum score. And then again, same thing if you were to add other other values into this. If you're a trader that values ratio confirmation a little more, you can make that worth 2 points. If you don't value minor structure at all, you can make it 0 points or just delete it. There's lots of freedom in here. Again, the key is that when I'm going through the market, I'm doing the same thing each time. I check out a price chart and I'm asking myself this: is the RSI overbought, oversold? Yes or no? All right, yes. Is there minor structure? All right, no. Major structure? No. Fibonacci confirmation? Let's see. Yep. Let me go to a higher time frame confirmation. Okay, got that. ABCD pattern? Yes. Advanced pattern completion? Well, no, not yet. You see, I'm going through the same thing over and over again, and before you notice it, you're going to become robotic in your analysis. And if you're robotic in your analysis, you should be finding the same type of trade setups each time. If you're finding the same type of trade setups each time, and you have a positive expectancy in your system, meaning that you did the back testing, and your back testing historically shows that trading this type of strategy, this type of way makes money, well, then all you have to do is take the trade. So let's look at an actual price chart, and let's see how we would use this live in the market. Maybe we'll find a live example right now. Let's go down to a day trading time frame. Let's go down to let's go 15 minute. 5 minutes. 5 minute may be a little bit slow. Okay, so let's say I'm looking at this trade right here. What do I see? Well, I see the market do this. Identify what the market's doing. Market's doing starting point, new structure high, outside return. We have a little gap because it's right after the weekend. New structure high, outside return, new structure high, outside return, new structure high. I then see this. I see the market come down. We get a break and close below this structure level and this structure level. So the last two previous outside returns. So I'm saying to myself, okay, Kill, well, it looks like we have a reversal in trend. Is there an opportunity for me to get short? And this is when I want to go through my my combined technical score. Is there an opportunity for me to get short, looking to sell the market, projecting a bearish trend? And again, just using this as an example. Here's what I would say. I would go through my checklist. I'd say, okay, is the RSI overbought in this scenario? Because I'm looking to go short. No, we're not overbought. RSI. So we're going to give ourselves 0 points. Is the RSI overbought? No. There we go. Next. Is there minor structure? Look left, structure leaves clues. I would say so. We have minor structure right here on this outside return. So I'd say minor structure, 1 point. Next thing on my list, is there a major structure? Well, let's go out to a higher time frame. Let's go out to the 60-minute chart. Draw in our line right here. See, is there a major structure on this line? And I'm not seeing anything. So I'll go no as we go down to our trading time frame. Major structure, 0. Do we have ratio confirmation? So do we have any Fibonacci ratios there? Well, let's see. Let's take a Fibonacci retracement tool. Let's go from our swing high down to our swing low. Well, look at that. We have a 3D2 right at that structure level. So ratio confirmation, yes, we have 1 point. Next, higher time frame confirmation. Is the market going with the overall trend or the underlying trend? I'm looking to take a short opportunity. Let's bounce back out to our 60-minute chart. Is the market bearish? I would say no. You can see the market overall has been trending up. So I'm not going to get my higher time frame confirmation on this. Ratio, that's not right. Ratio, there we go. So higher time frame confirmation, no. Next up, is there an ABCD pattern in here? Nope. We just put in 1, 2, 3, 4, 5, 6 straight bullish candles. So no ABCD. Is there an advanced pattern in here? Again, you guys haven't learned about that, but I can tell you there's not. Do we have an additional test of structure? Do we have a double top here? No, we don't. And do we have RSI divergence? Well, of course, we don't have our double top, so we don't have RSI divergence, giving me a 0 on this. So what I'll do is I'll analyze my score. Remember, I need a minimum of 4, so I'll say 1, 2. I only have a CTS score of 2, meaning I can't enter this trade. Now, well, I should say this, I can't enter this trade at the moment. Now, if we do spike up, maybe the RSI eventually does go overbought, which would change this to a 1. Let's say we do spike down and put in a double top with RSI divergence. Well, now all of a sudden my score changed, and I have a 1, 2, 3, 4, 5, which would allow me to enter the trade. So not only does it tell me if I can enter the trade now, do I have enough on the chart in front of me to enter a trade, but it also tells me what am I looking for. So as a trader live in this market, I'm identifying this level. I'm saying, oh man, this looks like it could be a good trend continuation opportunity to the downside. Let me run through my score. Okay. All right, we have that. All right, don't have that. All right, I have a CTS of 2 right now, so I know I can't enter right now. So I gotta play the sidelines. But I also know what to look for. So I say, well, if I get a double top, this is what I need to enter. If I get a double top with RSI divergence, that would give me a score of 5, which means I could enter. So again, it not only tells you if you can enter at the time, but it tells you what you would need to enter the trade. So again, you're getting ahead of the market. Identify, predict, decide, execute. Going through that process. Let's look at another chart. Let's go randomly to let's go euro dollar. And again, we want to check out the charts live because, well, when you're trading the markets live. It doesn't look like anything. Go pound yen. I'm going to hunt around some of these 15-minute charts to find some examples. It's a Monday. The markets usually move slow on Mondays, so we'll see if we can get anything quality. Let's go down maybe to a 5-minute chart here. Let's go euro yen. Okay, we got nothing live at the moment, but let's take a look at this right here. This looks fine, Aussie dollar. So let's say we're doing our analysis in the market and we see this. We see our initial swing low to swing high here. We see retracement. So now we're thinking this could be a potential ABCD pattern, right? If I copy and paste this leg, draw it up on here, and we're actually not going to get an ABCD pattern, but we'll stick with this example anyway. So we're looking at this structure level. Here's a key structure level that we've identified. We're saying, you know what? This is a key structure level. This looks like a perfect opportunity to get short on Aussie dollar. So again, we start, and I'll draw this line straight out for you guys. We start going through our checklist. So the first thing we want to look at, let's say price action is live right here at market. First thing we want to look at is the RSI overbought or oversold? So we look down, we can say, yep, the RSI is overbought, and we're looking to sell right here. Is overbought, so I have 1 point. Do we have minor structure? Well, look left, structure leaves clues. I see a minor structure level right there, so we can give ourselves another point. Minor structure, 1 point. Next, do we have major structure? So what I want to do is go out to a higher time frame. Let me draw a line on here so I remember our mark. We're on a 5-minute chart, so let's go to a 30-minute chart. Is there structure in the past? So we have our structure right here. We also have structure right here. Let's look left. You can see structure hits right here as well. Right here as well. And then essentially 2 times right there. So I think it's safe to say that we have a major structure. Structure hits that same point about 3-4 times. So I would call that major structure. So let's go back down to our 5-minute chart. And we give ourselves major structure, 2 points. Next, do we have ratio confirmation? Is this at a Fibonacci level? Well, there's no way to take a Fibonacci retracement from here because, well, we've already come up to the highs of our structure level. But what can we use? Yep, our other tool. We can take a Fibonacci extension. We can say, let's take our Fibonacci extension tool. Let's go from our swing low down here up to our swing high, back down, and see, is there a Fibonacci extension at that level? And right here we have a 1618. Now you can see it doesn't come exactly into it, but this 1618 does line up with this structure level. So we can give ourselves a yes for Fibonacci confluence right here, especially when looking at it at market. Doesn't matter that the price action breaks and closes above it. That's fine. We're thinking about a zone here. Our zone between our 1618 and our zone between our previous structure level. And you can see price action tests that zone and completes inside of it. So we'll give ourselves another point for ratio confirmation, which is going to be 1 point. So already we have enough to trade here. We have 1, 2, 3, 4, a CTS score of 5, but we always want to go through our entire checklist. And I'll explain a little bit why later as well. Do we have higher time frame confirmation? Well, let's go back to our 30-minute chart. Let's go to a 60-minute chart this time. Are we with the overall trend? Well, no. You can see the trend here is bullish, and we're looking for a bearish move. So we're not going to go with the overall trend. So we're going to get 0 points for higher time frame confirmation. Do we have an ABCD pattern completion here? Well, let's take our A to B, B to C, copy and paste this move, and we're going to be a little short, so no. We're going to get no points for an ABCD pattern completion. And again, the key thing you want to take from this, guys, is we're looking at the market the same way each time. Even if we know we don't have it, we're still evaluating it. We're still trying to see the same things each time we look at the market. Do I have an advanced pattern completion? There is actually, and again, you guys haven't learned about advanced patterns yet, but we actually do. This would be a bat pattern. looking at X to A to B, B to C, C to D up here. Again, don't worry about the advanced patterns yet. We're going to learn about those in the next few sessions, but we could give ourselves 3 points for the advanced pattern completion. Advanced P. 3 points. Next, do we have an additional test of structure? Do we end up getting a double top at this level? Well, yep, we get a double top right there. Do we have RSI divergence on that double top? Yes, we do. You can see a lower high on our RSI, but an equal high on our price chart. So now we have 2 times top, which is 1 point, and RSI divergence, which is another point. So you can see the total on this trade is going to be 1, 2, 3, 4. Oops. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We have a 10-point trade here, which is a very good opportunity because, well, obviously it beats our minimum, which was, or my minimum, which was at least a CTS of 4. So as we enter this trade, boom, we see that it does roll over a little bit. I'm not sure if we would have got profit off of here. Let's see. Yep, would have hit target ones and then stopped out for break even on our second half of the position. Now, here's the key to me. Although we have a valid CTS score right here before the double top and RSI divergence, we still have a CTS of 1, 2, 3, 4, 5, 6, 7, 8. Assuming I'm not taking the bat pattern, because I execute advanced patterns very aggressively, meaning I don't wait for any type of confirmation. I just put the limit order there and wait till I get filled. But assuming we're not doing that, I have enough points to enter the trade right here. And it's going to be your decision whether you still want to wait for a different entry technique, or do you just want to take the trade as soon as your score is hit. And one of the things that I have on my personal trading plan is I'll put an asterisk next to these things. Meaning that I can't enter a trade until these things happen, until these 3 things happen. So unless I have RSI overbought, oversold, additional test of structure, and RSI divergence, I cannot enter a trade. So even right here, although my CTS score is high enough, I can't enter the trade until I get the rest of what I need. So until I get this right here, until I get my valid double top and my RSI divergence, I can't enter a trade. And that's a filter I put in to be a little more conservative and a little more, just to gain a little more confirmation before I enter trades. Now that's something you don't have to do, but I do recommend it if there's something that you absolutely need, put an asterisk next to it and say, I cannot enter a trade. Even if I have everything else, I cannot enter a trade until A, B, or C occurs. And again, that's part of the IPDE. Identify what the market's doing, predict what's going to happen next, decide how you're going to enter, and this is the decision point. What do I need to enter? Lower low, lower close, higher high, higher close, double top, double bottom, 2618 trade. Decide a limit order aggressively. Decide how you're going to enter, and then of course execute your order. Now, lastly, with the CTS system, and we can roll. Let's go through one more, real quick. Let's find a random thing that I would evaluate. What would I evaluate here? All right, let's look for a trend continuation opportunity right here. I see a few of them. Let's just take. Let's go to a 15-minute chart. Delete that and let's look right here. So the Aussie dollar, we've been trending down, and we actually in fact, let's see, this is not going to give us one. All right, we've been trending down, and then we come to a period of consolidation where we just basically go sideways for a little bit. We then have an impulse leg up, giving us a new structure high right here. And as trend continuation traders, we're asking ourselves, how can I get onto the trade? The market has spiked down. We've come into this level, and we're looking to get involved on a move going up. So how would we evaluate this? Well, we go through our checklist. We say, is the market oversold? Down here. I could look, see my RSI is indeed oversold. That gives me 1 point. 1 point. Do we have minor structure? Well, let's draw a line in at this structure level. And we've most likely already did this because, well, if you're a trend continuation trader, what are we doing? Well, we're drawing lines at our previous level of structure. We're drawing fibs in to try and predict where our outside return is going to come to. So do I have a minor level of structure here? I do. Look left, you can see a little structure level right here. Look left, you can see a structure level right here. As we zoom out, you can see a little structure level right here as well before that false breakout. So yeah, it's safe to say we do have minor structure, giving us 1 point. Do we have a major structure level? Well, let's go out to a higher time frame. We're on the 15-minute chart. So let's go up 4 times our time frame. Let's go to the 1 hour chart. Zoom back. Do I have, or scroll back, do I have major structure at that level? See, we spike through it here. We don't quite hold at it. I would say no, we're not seeing anything. A little higher we do, but not at our current level. So as we go down to our 15-minute chart, and I apologize for all this scrolling back and forth, but it's nothing at market at the moment. We say, do we have major structure? Answer is no, 0 points for that. Next, do we have ratio confirmation? There's a few things we can do here. We can take a Fibonacci retracement from our swing low here of this last move to our swing high. We indeed have a 382 lining up right on that line. What a coincidence. We also have this. Let's take a Fibonacci extension from this swing low, or this swing high, excuse me. And again, taking my Fibonacci extension tool, this swing high to this swing low, back up, and you can see that. What else do we have here? Well, we've got a 127 Fibonacci extension as well. So we have Fibonacci confluence. We have a 127 Fibonacci extension along with a 382 Fibonacci retracement. So do we have ratio confluence? Yes, giving us 1 point. Next, higher time frame confirmation. Let's go back out to our 60-minute chart. We're looking for a bullish entry. Are we in a bullish trend? Well, at the moment, I would say yes, because we just broke past our key structure level here, and we're looking to retrace back into structure. Again, we've just broken two major structure levels, one right here, can't see it, one right here and one right there. So it's safe to say that we are indeed in a bullish rotation, which allows me to give myself another point for higher time frame confirmation. And then going back, hopefully that's the last time I have to zoom out. Making myself dizzy going back and forth through these time frames. So higher time frame confirmation, 1 point. Do we have an ABCD pattern completion? Doesn't look like it, but we can draw one in. If we look at this minor move right here, let's take an A to B right here. Let's copy and paste it. Would we have an ABCD pattern completion like this? Nope, we're a little short of that. So no points for ABCD pattern completion. Zero. Do we have an advanced pattern completion? We do not. So advanced pattern, 0 points. Do we have an additional test of structure? No, we don't. We just have one test and the market basically goes sideways, so no. And do we have RSI divergence? No, we don't. So we're going to get zeros on our last two for retest of structure. Basically double bottom do we have? No. I should write that in, 2 times bottom. Two times bottom, 0. RSI divergence, 0. And we can start adding up our CTS score. You can see we have a score of 1, 2, 3, 4. So if 4 is your minimum, well, now you can enter this trade at this moment. And again, you still need to use an entry technique. It could be a limit order. It could be a higher high, higher close. You still need to find an entry technique for how you're going to enter. But you are now allowed to execute and involve yourself in this trade because it does meet your combined technical score. Again, for me personally, what do I need? Well, I have some filters. So I need an additional tested structure. I need RSI divergence or I can't trade it. So in this scenario, I wouldn't be able to involve myself in the trade because I don't have those two things, even though it meets my Fibonacci score. Or not my Fibonacci score, even though it meets my my CTS score. Make sense? Hope so. Now you're asking yourself, Akil, doesn't it seem like you probably miss a lot of opportunities because you need that double bottom and need that RSI divergence to trade? And that's true. And here's a trick that you can use. It's called using a lower time frame entry. So we use 3 main time frames. We have our higher time frame, which I said is about 4 times your normal time frame. We have what's called our trading time frame, which is the main chart you're looking for your patterns at, or your entries and strategies at. Then we have our lower time frame, which if you choose to use it, you can use it strictly for entry techniques. So our higher time frame is going to be for getting a bird's eye view of the market, the underlying trend, major structure levels. Our trading time frame is the main time frame we do our analysis on. So in this case, it's the 15-minute chart. And the lower time frame would be used if you put in your rules that you can go down to a lower time frame to look for entry reasons. So here's how I would handle that. I would go to my CTS score. I'd be right here. I'd have my CTS of 4, so I'd have enough to enter the trade. And instead of waiting for that double bottom on this time frame, I would go down to a 5-minute chart. So basically 1 time frame lower. So the time frames I look at are daily. I'll write these in for you guys. I'll look at daily, 240, 60, 15, 5. So if you're on the 5-minute chart, your higher time frame is the 15. If you're on the 15-minute chart, your higher time frame is the 60. If you're on the 60-minute chart, your higher time frame is the 240. If you're on the 240 chart, and 240 is the same as the 4-hour chart. If you're on the 4-hour chart here, your higher time frame is the daily. And then vice versa. If you're on the 4-hour chart as your trading time frame, your lower time frame is going to be the 60. If you're on the 60-minute time frame, well then your higher time frame is going to be the 4-hour. Your lower time frame for entry is going to be the 15. If you're on the 15, your lower time frame for entry is going to be the 5. Your higher time frame for confirmation is going to be the 60. If you're on the 5-minute chart, well then you don't really have a lower time frame. I'm not a big fan of going down to minute charts or anything like that. So 5-minute is about it. You can go to the range bar charts, but that's really an entirely different beast. So if I can find what we were looking at, it's a lot easier when the market's live because well, you don't have to scroll back as much. So I can go down to my lower time frame and say, well, what do you know here? Here's the level I was looking at. This was my potential reversal zone. And guess what? I go down to my lower time frame and look what we have. We indeed have a double bottom. We also have RSI divergence. Now I can enter the trade based on my lower time frame confirmation. So I had a valid CTS score on my trading time frame and strictly went to my lower time frame to find an entry reason. And again, in this case, my entry reason is trading the double bottom. You could do the same thing for a higher high, higher close as well. So that's the CTS system for you. I'll bring the checklist right back up again, but you'll have a PDF document of this. But it's basically using the same tools and the same pattern of evaluating the price chart the same way each and every time. RSI overbought, minor structure, major structure, and before you know it, you'll actually become very robotic, and you won't even have to go back to this checklist. In the beginning, I had this printed out in front of my computer. I had it on my desk on my whiteboard, and I'd look every time. I'd look up and say, okay, all right, go down to the chart, find major structure, look up, all right, ratio confirmation, look down at my computer, see if we have ratio confirmation. But once you get in the habit of looking at the same thing over and over again, and it's pretty cool because it allows you to get a tunnel vision and ignore some of the other junk and mess that is out there in the market. But the more you do this over and over again, eventually you won't even need to look at your checklist. You'll be able to analyze a chart and know exactly what you need to trade, and know exactly what you need to ignore. And that's when you start trading consistently. So CTS, Combined Technical Scoring System, basically it's a combination. It's the last installment to everything that you guys learned so far. So trend continuation traders, counter trend traders, ABCD pattern traders, double tops, double bottoms, 2618s, that all can be used in combination with this combined technical score to make sure you find yourself in the highest probability trading opportunities.